Hello traders, welcome to the Forex market preview. My name is Joseph, and in today's video we're going to be analyzing the markets. But before we get into that, I want to ask you a question. How many of you guys tuned in to my live day trading streaming on YouTube this week? If you haven't, then you might want to stick around for the results, because to say you've missed something is an understatement. But anyway, let's get into the charts. Let's see the potential setups that we've got coming up this week in the Forex market. Now I've got my chart here on the euro dollar on the 1 hour time frame, and when it comes to analyzing the market, it's all about building a case for entry. And when you're looking at any chart, before you start your analysis, you should be able to determine what kind of structure you're looking at. And by that I mean if the market is bearish, bullish, or in consolidation. That is the first rule when it comes to analyzing the Forex market. Now looking at this chart, we can clearly see that the market is bullish. Now we need to be able to look at the current phase of the market and be able to determine when the market is going to continue that bullish movement. Now the next thing we need to do is we need to build a case for when we are going to enter into a long position. Now this is a stage where you need to start focusing on the structures that are around the current market price. So looking left here, we can see a couple of structures here and here, and we can see that the market is currently at that structure level. Now if you're a trader who hasn't got too much experience, this is probably going to be a perfect spot for you to go long, simply because of these previous structures, which are now going to act as a support level. So the market should turn and reverse from this point. And if you are an experienced trader, then this reason is not enough for you to just go long on this market. Because remember what I said at the beginning, it's all about building a case for entry. So we're going to go one step further, and we're going to look at the previous structure that the market has put over here. So looking at this market, we can see that the market has put in a nice bullish structure right here. So we've got our starting point here. I'm just going to label that as SB, and we've got our initial structure high, ISH, and we've got our outside return, a pullback or retracement, or however you want to call it, and we've got our new structure high, NSH. Now we know that we have two different rules for the outside return of a bullish structure, and the first rule is that the outside return of a bullish structure cannot go below the previous starting point, or in this case, the previous outside return. And the second rule is that the outside return of a bullish structure must retrace to at least the 382 Fibonacci retracement of the previous impulse leg. And in this case, the impulse leg from the outside return to the new structure high needs to come in and touch at least the 382 Fibonacci retracement. So basically what we're saying is the outside return of a bullish structure needs to come into a zone somewhere between the 382 Fibonacci retracement and just above the outside return. So now we know that this market, I'm just going to delete that, can come into anywhere within this zone before we get a reversal. So now, even if we were to take a trade here and go long and buy, as soon as the market reopens, we just place a buy order or market order to buy from this position. We know that this market could potentially come a little bit lower, and that shouldn't make us panic at all. But I'm going to take it even one step further. So let's just get rid of this. Get rid of this and try to focus on the current market structure. Now if you're someone who is familiar with advanced pattern, I'm actually going to delete this as well. You can potentially see an advanced pattern building up, and we've got the X to A leg, A to B leg, B to C leg, and the market is currently forming the C to D leg, which is going to give us an entry point which is going to be above the previous structure low, above the previous starting point, above the previous outside return. Now the question is, what pattern are we forming right now? So I'm going to bring in my Fibonacci, swing low to swing high. And look at the retracement, we can see the market has come into the 50% retracement. So straight away we know that we're looking at a back pattern. And the entry point for a back pattern is somewhere at the 886 Fibonacci retracement. So now we can see that even the completion of the advanced pattern, the back pattern, that is still going to come in above the previous outside return. So that means three different conditions are fulfilled. First of all, we've got the market coming back into the previous structure. But you have to remember, the market doesn't always reverse on a dime. So now we know that we've got a previous structure support here. We know that the market is bullish. We know that we've got a current bullish structure. And we know that we've got a bullish advanced pattern which is going to complete somewhere at the 886 retracement. So I'm going to take this off. And we're going to draw out our advanced pattern. Swing low, swing high, X to A leg, A to B, B to C, B to D with a completion somewhere around the 886 retracement. So there we can see right on the spot the market is going to complete at the 886 retracement line. So now when the market reopens and we take a long position, we're still going to have it at the back of our minds that this market can still go lower, simply because maybe it's going to come down all the way to complete that bullish advanced pattern that we've got here, or maybe it's just going to come a little bit deeper. Because remember, the market, this outside return of a bullish structure, has a zone here that it can go anywhere within that zone, and we mentioned that zone between the 382 Fibonacci retracement and above this previous structure point. So now let's move on to the next currency pair that I'm going to have a look, and that currency pair is going to be the pound against the US dollar. Now I'm back again to the first rule of analyzing the forex market. We need to be able to determine what kind of structure we're looking at. Now looking at this market on a 1 hour chart, we can see that the market is clearly trending up. So we've got a bullish market. Now the next thing we need to do is focus on where the market is at currently and see if we can identify any structure level. So looking at this market here, we can see we do have one structure level, the previous structure resistance, which is now going to act as a support level. So now that we've established that the market is trending up, the market is bullish, we've identified a structure level that is close to the current market price. Can we build more cases for entry? Now if we look at this market, we can see that we also have a recent bullish structure. Starting point, initial structure high, outside return, new structure high, and we can see the market is currently giving us another outside return. So what do we know about the rule of the bullish structure? The market needs to stay above the previous structure low, and the market also needs to come down and touch at least the 382 Fibonacci retracement. So we've got a zone here that the market potentially could reverse anywhere within this zone. So that is as our second case for entry, the fact that we've got a bullish structure and we know that the market is going to stop retracing very soon and start going up. Now I'm going to delete all of this, and then we're going to try and look for one more case for entry. So I'm looking at focusing on this current market structure. For those of you guys who are familiar with contraction and expansion, we can see the market is making a little contraction channel right here. From tool. So I'm going to change the color of this because everything is so dark here. Let's make this blue and less thicker than that. So we do have a contracting channel right here, and we know that these types of contractions usually break in the upward direction, and there is no telling when this contraction is going to end. So the market can keep contracting, but as long as it stays within the zone of the outside return, then it's going to eventually break in the upward direction. So once the market reopens, even if you take a long position, you should be aware that this contracting channel can last for a few more hours. But as long as the market stays above the previous structure low, the previous outside return, then potentially the market is going to resume the uptrend that we're looking at. So let's move on to the next currency pair. And the next currency pair that I'm going to analyze is the US dollar against the Japanese yen. And as always, the first rule of analyzing the market is looking at the market and be able to tell what kind of structure you're looking at. Now looking at this market, we can't really tell whether the market is bullish or bearish. So in that case, we can see that the market is in consolidation. So we are going to try and focus on the current price action and try to predict what this market is going to do. So now, what is price action telling us? Now, price action is telling us that if we look at this market, we're going to try and focus on this little structure here. Now, this is a contraction in the market, kind of a consolidation, where the market recently broke out of that contraction. Now, if you remember my video last week, I spoke about a structure like this. Usually when you get a structure like this, once the market breaks out of that contraction, it's going to go all the way back down to the previous structure low. So if the market is going to come back to this previous structure level, the question is, excuse me, how is it going to get there? So let's try and see if we can find another case for entry. I'm going to delete that, and I'm going to take you back to advanced patterns again, because if we look at this market, we can clearly see that we had an impulse leg, we had a pullback, a correction. We can see that the market is starting to rally. Now, if this market is going to go down and retest the previous structure low, then we're going to have something that looks like an advanced pattern. So let's bring in our Fibonacci and see what kind of advanced pattern the market is going to form there. So swing low to swing high, and let's look at the retracement here. We see we've got a 618 retracement. We didn't quite get to the 786 retracement, so straight away we know that we're looking at a potential godly pattern. So if we're looking at a godly pattern, our entry is going to put us somewhere at the 127 extension, which is going to be just above the previous structure low. But with these kind of strategies, with these kind of structures, I do expect the market to potentially retest that low before going up. So we could potentially go a little bit lower before we see the market rally from there. So there you have it, 3 different currency pairs, 3 different trades. So now you know what the market is likely going to do once it reopens next week. Now you have it at the back of your mind how you're going to approach the market, and that is the most important thing, guys. So now what I'm going to do, I'm going to delete all of this, and I'm going to go back to my trading time frame, my trading template, excuse me. So we're going to put this on the trading template, and we're going to bring in our shaded sections, and we're going to put this back on the 15-minute chart, because now we're going to talk about results of this week's trading. For those of you guys who did not tune into my live trading stream on YouTube, now you're going to see a result that is probably going to blow your mind. Now I've put the results on the chart just to make it a little bit easier, because what you're going to find out, I mean, the videos are all on YouTube, guys. You can go and watch the live stream for the last week, Monday, Tuesday, Wednesday, Thursday. I did not stream on Fridays because I don't really trade on Fridays. I'm gonna hardly trade on Fridays, and especially last week Friday was the non-farm payroll, so I stayed out of the market completely. But these are the results of the trades that we took in the live trading room, and you can see those videos if you have 2-3 hours to spare and watch how all the trades played out. So I've just kind of summarized. This is the total net pips that we made on all the trades that we took. I think we took about seven trades or 8 trades in total altogether. I can't really remember. I mean, I'm going to show you the Excel spreadsheets anyway, so you can see how many trades we actually took. But on this currency pair, particularly the pound against the Aussie dollar, we took a couple of trades, and we also took a couple of trades on the Euro Aussie. As you can see, these are the results of the trade. And also we took a trade on the pound yen. That's where we took our first trade, and that ended up being a losing trade. That was the only loss that we had this week. And we also took another trade on the pound against the New Zealand dollar on Thursday. That was the last trade that we took this week. And so now I'm going to show you a couple of clips from the live trading room. I've kind of just summarized a lot of the trades. So this is the second day, so on Tuesday, so that's when we took most of our trades. And so this is a trade on the euro against the Aussie dollar. As you can see, this was recorded from the live day trading session, and if you want to watch the whole video, you're going to have to watch the whole live stream. But I just kind of recorded the very important session where I've opened and closed a position. So this is the euro Aussie dollar. As you can see, this is when we had a position open, and we're also going to move on to the This is the pound against the Aussie dollar. As you can see, at one point we're up on, and this is also the pound against the Japanese yen. So these are all the trades that we took on those days. I mean, and I'm gonna show you a couple of. So this was the close when we closed the trade. So pound Aussie dollar, as you can see, all the way over 170 pips that we took on that trade. And also the pound against the euro against the Aussie dollar as well. We had 2 positions on there just because of what the strategy says. And also the pound against the Japanese yen, which we took a break even, I believe, on that trade. But anyway, so like I said, if you want to watch the whole trading stream, you can rewatch it. If not, then you're gonna have to tune into next week. I'm gonna be streaming on YouTube as well next week. However, I don't think I'm gonna be streaming on Monday because it's Easter Monday. So it just depends on how volatile the market is. If I see that the market is quite volatile, then I might stream on Monday as well. But I'm definitely gonna stream on Tuesday, Wednesday, and Thursday. And depending on what the market structure is heading into Friday, I may or may not stream on Friday. Like I said, I rarely trade on Friday. So now let's look at the spreadsheets of the overall result in total since we started this year. So this is the results from the first week in April. As you can see, the results I just showed you guys. So we've taken a total of 6 trades. We had 5 winners and 1 loss. And these are all the pips the pips that we took from the winning positions. So a total net pips of 456. I mean, this is probably on track to match last month's results. I mean, last month we took 21 trades. We won 19 and lost only 2. And you can see a total pips of about 3,502. And the previous month before that wasn't as good as March, but we still took 1,481 pips. We had 13 winners and 4 losses. But the January was the best month to date so far. No, it wasn't. Actually, it was March. That was the best one, 3,500. But in January, we took 20 trades. We had 17 wins and 3 losses, as well, a total of 2,960 pips. So these are all the results that we've taken so far from the live day trading. Now you can see this month, I'm going to try and stream every single day this month, guys, so you can see. So make sure you tune in Monday to Thursday. Like I said, this Monday, it depends on how volatile the market is. I may or may not stream on Monday. And Fridays is kind of probably there's always like a 20% chance that I might stream on Friday, just depending on, because by Friday I will know whether I'm going to trade or not, based on my day's trading strategy. Now, in terms of the strategies that I trade, you can see clearly here at the top of the Excel spreadsheets, and you can see the strategies that I do trade when I'm day trading live. And obviously, like I said, this is not something that you're going to find anywhere, guys. This is a strategy that I've personally developed myself. So now, for anyone who is interested in learning how to day trade and make consistent profitable returns like we've been doing, like you've seen on YouTube, for those of you who tuned in last week, now I've got an interesting offer for you. I'm probably offering the cheapest day trading course that you're going to find anywhere on the internet. Now, if you're interested in learning how to trade, I've got an offer for you. I'm going to give you the first session for free. So all you have to do is get in touch. You can send me an email over our website. You can drop me a comment under the video, and we're gonna talk. And if you're interested, we're gonna have a first session where I'm gonna teach you the first strategy for free. So I'm gonna teach you either the runner or the rise and crash. I'm gonna teach you that one for free. And if you're interested in learning the rest of the strategy, then we can talk about what we're gonna do from there. So I think that's it for today. So thank you so much, guys, for taking your time to watch this video. I hope you find some of the content that I've shown you in terms of the analysis. If you find it useful, then do leave a comment or a like. I'm greatly gonna appreciate that. And until next time, I hope you have a wonderful week in trading next week.